questions. Homayoun Falakshahi joins us now, senior commodity analyst at Kpler. Great to have you on the program. So just some wrapping up yesterday's OPEC Plus meeting, were there any major surprises for OPEC watchers?
Hi, good morning. No, not really. I think what happened yesterday was quite expected by the market. So this didn't really come as a surprise. I think as long as we have seen that the Omicron variant so far has not had a huge impact on demand globally, even though it has had some impact on jet fuel markets. I think as long as we have seen that the impact so far has been quite mild, then it didn't make a lot of sense for OPEC Plus to change the course of its strategy. So they just stuck to their ongoing schedule, and I think they're likely to do so in the next few months. I guess from here, the key question is whether they will be able to bring back that supply that they are saying that they will, that they are going to bring back next month.
Well, exactly. I mean, that was my next question. How confident are you that we will actually see the full 400,000 barrel per day increase come through?
So far, if you look at the past 6 months, we have seen exports from OPEC Plus, so countries that are part of the agreement, jump by about 2 million barrels per day over the past 6 months again. So the rise has been quite healthy lately. We also have seen an increase of 500 kbd in exports last month. However, if you look at production numbers and exports on some of the major countries, this has been quite stabilizing. So if you look at Saudi Arabia, the UAE and Russia, which 3 of them hold the largest spare capacity in the organization, this has, again, production and exports have quite stabilized. So looking forward, the other smaller countries it seems that they have reached a kind of roof when it comes to production capacity. And I don't think that we have a lot of spare capacity from these countries, especially countries in West Africa. So the 2 countries where most of the spare capacity is going to remain in the next 6 months or 9 months is going to be Saudi Arabia and the UAE. And I think that means that in the next few months, we're probably not going to see a supply increase as high as OPEC Plus has announced to the market.
Well, bearing that in mind, the Omicron variant is proving thus far not as bad as feared, and we're seeing that reflected in many different asset classes. I wonder, yes, oil has recovered since the December lows, but why hasn't it rallied further?
I think you have a big cap on prices right now, and that's, the key reason is China, and the fact that China is still ongoing with its zero COVID policy, and we think that it will likely do so until at least the Lunar New Year and the Winter Olympics, which are at the end of February, and maybe even throughout the year. So I think the fact that China continues to impose strict lockdowns, localized lockdowns, as soon as it sees a few cases of the Omicron variant, is the main cap for prices. So yes, we have seen Brent hit about $80 a barrel, but I don't think that in the short term we have a lot of upside from here. So the picture is quite mixed between bullish and bearish factors, and again, the main bearish one right now being China.
Talking about energy in a broader context, there's obviously a number of unknown factors that people are watching. I wonder, in your view, what the key risks or the key wild cards are that you're going to be keeping an eye on in 2022.
So obviously, if we see a new variant, a new COVID variant hitting demand, I think that is going to be the main risk to look at from the demand side. However, again, looking at Omicron, the impact on demand has been quite mild. So we expect demand to continue go up quite strongly this year by about 4 million barrels per day. I think if you look at just explaining our outlook, in the short term, we have, again, the picture is quite mixed because there's a few bearish factors impacting other bullish ones. So we also see more supply, for example, coming from the US, very strong growth in US shale production lately, and we think this will accelerate in the first half. However, looking forward towards the second half of the year, our picture gets much more bullish. And that's because if you assume that demand is going to remain strong towards the second half of the year, then supply is really going to struggle to catch up with demand in the second half of the year. And so then you will have other wild cards, and that includes, for example, the Iran nuclear deal. And Iran will be one of the few countries that will be able to add more supply to the market in the second half of the year.
Do you think the market is pricing in a meaningful ramp up in U.S. shale investment this year?
I think probably not to the extent that we are likely to see. So I think the consensus is probably that the U.S. increases production by about 600,000 barrels per day throughout 2022. But I think we're likely to hit even more than that in just the first half. Right now, we see U.S. producers adding 100,000 barrels per day every month. So by the end of the first half, we're going to see, we think, close to 800,000 barrels per day actually being added in terms of production. That is going to slow down in the second half, but our outlook for the full year is around 800,000 barrels per day, between 800,000 barrels per day and 1 million barrels per day. So, I don't think that the market is right now factoring in such a production increase from the US, especially in the first half.
With regards to Russia, I mean, clearly what's happening at the Ukraine border is a major geopolitical touch point that we're all closely watching. President Biden has made clear that he will act decisively if Russia does invade Ukraine. How do you see Nord Stream 2 factoring in, and do you see Europe leaning into using the pipeline as a bargaining chip? Certainly, President Biden would like to see that happen, but what about Europe?
Yeah, definitely. I think when you look at Europe's position, the continent is quite in a tough position because it needs the gas from Russia. At the same time, it cannot really surrender to Russia's demands, especially when it comes to Ukraine and Nord Stream 2. So I think the situation is going to remain quite complicated. We're likely to see a sort of agreement with both the US and Europe taking a step backwards to allow to kind of satisfy Russia so that Russian gas can flow again to Europe. The whole crisis, though, means that we're likely to see a lot more volatility when it comes to natural gas markets, and that already has started to impact oil markets as well. So, for example, we see demand for fuel oil in Asia coming much higher right now. We also see, for example, Japan switch to jet fuel for heating purposes. So we have seen imports increase to close to 100 kbd, 1,000 barrels per day of jet fuel, and that is clearly an impact of the gas crisis. So it is already having an impact on the oil market, and we think that the impact on demand means that we're likely to see close to 1 million barrels per day, potentially more demand for oil if the crisis continues.
Homayoun, thank you so much for joining us this morning. Homayoun Falakshahi, Senior Commodity Analyst at Kpler.